All right. Hey guys, welcome back to another video. This week we're just going to have a quick little video going over break of structure. It's a little confirmation confluence that I and a lot of other people use. I tend to use it a little bit differently than other people, but I use a similar definition to the ICT trading strategy. It's very simple to learn. Some people have trouble with it, and that's okay. As always, if you have any questions after this video, feel free to shoot me a DM, or better yet, just ping me in public chat. Get that engagement up. And I'll answer there for you and anybody else who may have the question. So let's get started. Break of structure is a tool used when analyzing charts to help determine when the structure of the market or the trend of the market is changing. And so the main components of break of structure are going to be the highs and lows of the chart. You're going to want to mark those out. So a high, by my definition, it's very simple. It's an up candle followed by a down candle. That is it. Okay? So this would be a high, up candle, down candle. This would be a high, up candle, down candle. This would also be a high, technically, you know? That's it. Just up candle, down candle. It's a two candles pattern. That's a high. And the low, exactly the same thing. It's a down candle, then an up candle. That's a low. So down candle, up candle, that's your low. Down candle, if you zoom in, you can see that this is in fact a down candle. Most people won't classify this as a low, but according to my definition, I do. It makes things simpler. That's a low, down candle, up candle. This is also the low, down candle, up candle, right? So we're going to go ahead, clear all these. If you guys have any other questions on highs and lows, it's a very straightforward thing, so I'm not going to take too much time on it. Highs, up candle, down candle. That's a high. Lows are the exact opposite, down candle, up candle. Doesn't matter what's on either side of it. It's a candlestick pattern. Okay, so break of structure happens. So we're going to first look and determine the market trend we're in. All right, let's say right here we're in our uptrend, right? Let's say we are right here. Okay, we're in our uptrend, right? Here's our high, here's our low, and then we're going higher high. This is the next high. See, up, then down, and then higher low, down, then up, down, higher high, higher low. And then so break of structure is going to happen when a candle closes in the opposite direction of the trend. And what I mean by that is, let's say, for example, right here, let's figure out where the market trend changes. Okay, so this is our high, this is our high, we're in an uptrend. Okay, so in an uptrend, we're going to be looking for a candle to close below the most recent low. Wicks don't count on this. We're looking for candle closures only, right? So here's our low. Alt. Here's our low. Down, up, there's another low. Down, up, there's another low. Down, up, here's another low. And look at what we have here. This candle right here closes below the most recent low. This would be a break of structure to the downside. This would mean we are in a downtrend now. And as you can see here, market structure quickly changed and we broke it back to the upside, right? Don't trade on just this. You look for your entry, like your point of controls or your VWAP or your fair value gaps or whatever you use to find a good confluence area for an entry, and then you watch how the price reacts off of those levels. And if you see a break of structure in the direction that you wanted to see, that's a good confirmation, and then at that point you enter the trade. So you don't trade on break of structure alone. You don't say, oh man, this candle closed down here, I better short it, right? Because you need to be looking for shorts, and you need to confirm with your other confluences. You need to already be looking for shorts in this area, and then you get that break of structure confirmation, and then you would have entered a short, right? So we have our break of structure. I'm not gonna, wrong line, sorry. We got our break of structure to the downside right here. And then so when we're in a, and so now technically right here, at this point, we are in a downtrend. And in order to come back to an uptrend, we need to break structure to the upside. Okay, if you're already in a downtrend, you can't break structure to the downside. Okay, you can't look, it's not a valid break of structure if you're already trending down. Break of structure is only valid when it's changing the current trend that the price action is moving in. Okay, so if we're in a downtrend here, okay, and so we're looking for a candle close above the most recent high. So right now, the most recent high is this. See, up then down, and then up then down. Here's a high, and then look at this right here. Here's our market. Here's our break of structure back to the upside, right? Because there's our high, and look at, we got a candle close below it. Above it. Sorry. Okay, and now we would be looking at the lows to see a structure, a break of structure to the downside, right? So there's our low, there's our low, there's our low. This is a good example of candle closures versus wicks right here, okay? Because as you can see here, we have this low, right? Now we have our candle for our next low, because down then up, and then down then up. Here's our next low. We have our candle wick that comes down below this low, but this would not be a valid break of structure because, as you can see here on this candle, we did not close below this low. So this is not a valid break of structure. And as you can see, it keeps going up. Okay, so here's a good example of using break of structure in, I'm going to move now to an example of how to use break of structure in a trade. All right, so we have our example here on ADA. This is a very cherry-picked example, but just I wanted to find one that looked good so you guys can understand it a little better. So right here, as you can see, so we broke into an uptrend here, and then we broke back down to downtrend here, right? And then we didn't close above this high, so we're still in a downtrend here up until this candle. This candle right here is our break of structure, because as you can see, it closed below the high, closed above the most recent high, and then that's supported by our RSI divergence, indicating from, if you watched last week's video, indicating that market momentum is shifting. We also have these three lines right here are liquidity, potential liquidity sweeps that have been confirmed here. Liquidity is going to actually be the topic of next week's video. It's going to be a longer one. It's going to be much more in depth. So be there for that one. So we have confirmation that this was a liquidity sweep followed by an aggressive break of move upside, a move to the upside with a break of structure. A fair value gap was formed here, which I will cover eventually as well. And you can see there's a rejection out of it. So I think at this point right here would be the long, right? If, say, BTC and overall market sentiment agreed. And we could probably put our stops would be below this fair value gap if you're going to play it really tight. This is on the 1 hour chart, so look, this is only a 2% stop loss. But I would probably end up putting my stops down here or even down here under this order block, which we'll get to eventually. And then the take profits would be, our first one, we're looking for a good TP level around 1R, which I would put right here because it matches with this high. And if we're going to sweep liquidity and turn around there, this is a good area of interest to do it. The second one would be around these highs over here. 3, I would go for, maybe this is a little bit of a stretch, so maybe I would say, oh, what's the point of control? Which I've covered in many articles, and I'll probably make a video on it eventually. Right there. That would be target 3. And then target 4, we're going to go all the way up here. Target 4, usually when I make trades, is kind of a moon bag. Maybe the final target. So we're looking at Possible risk to reward of 5.46, and then let's see what happens. There's target 1, target 2, target 3. Most of the trade would be closed at target 2 most likely. So it would be like a third, and then after target 3 only like 10% of the original trade is open most of the time. You know, it depends. If that's kind of the standard for me at least. But if that changes, I'll let you know, like on a trade by trade basis. And this one you can see it went to hit all 4 targets, and now that doesn't always happen. Like I said, this is a very cherry picked example that I spent about 10 minutes like digging around on charts to find. But I just wanted to find one that is very very clear and easy to understand, right? And we're not trying to catch the bottom here, right? Like just like with all the other confluences, you know, I say don't trade on one confluence alone. And so using this RSI divergence, sure, it would have gotten a better entry, but it's higher probability, and that's the key. When you have all the combination of all of these confluences together, it's higher probability. And so maybe you don't catch the perfect bottom, but that's okay. You catch the majority of the move more frequently. Your win rate is higher, even if, you know, you could have gotten this crazy entry if you just entered on the RSI divergence, but, you know, hindsight's always 20/20. And so by combining a bunch of different confluences, you get safer, more reliable trades that make you profit more frequently. I'm going to find another example of a break of structure and a trade setup that would use break of structure, but I'm going to look for the short side. So I'm going to find a short using break of structure. Just a second here. All right, now this setup is how you could have used these tools together to short the perfect top of BTC at 108,000, the current all-time high. And here's a great example of how combining confluences makes the trade a much higher probability trade. So for this one, as you can see, we broke structure to the upside here. We're in an uptrend now. Okay, we have a good RSI divergence right here. Look at that. Look at that huge bearish RSI divergence, right? So we're going to want to wait for a break of structure. So in order for break of structure, we need to close below the most recent low. So down then up, here's our most recent low, right here, no close below it. So now this is our most recent low. Right here, we need to close below this wick. Now this is our most recent low. We need to close below this. This is the low we need to close below. So I'm gonna just move it. So now this is our most recent low. And now then it moves to that and to then that, because we didn't close below it, we just wicked below it. See, if you would have just taken this short based on this RSI divergence, it wouldn't have gotten you very far, because look what happens here. Okay, we keep going. All right, look at that. Here's our most recent low. Finally, we have a break of structure here. Okay, and if you'll notice, we have another RSI divergence here. Now this break of structure is confirming the shifting market trend. So the entry zone for this short right here, and you could say, oh, it swept liquidity here too. And look at how impulsive this rejection was. So your entry point could have been here. It could have been basically anywhere in this box, right? But let's just say you took the trade once you saw the trigger, and that was your short, right? And your stops are going to be above the high or a higher time frame break of structure back to the upside, right? Because we're on the hourly here. First take profit, we're going to go for somewhere in this fair value gap right here. We can move this even here, right? And let's say, oh, guess what else is going to be in this fair value gap? The POC of this, right? So we're going to shoot for that as our first take profit. Our second one I would probably put here, just because it matches with this low and also these highs, and also probably there's a POC right here as well from this, in this area. Yeah, right? So I would probably put it right there on that POC and take profit 3. I'm just looking for key levels that kind of match with the risk to reward pattern of 1, 2, 3, 4, right? So if I'm trying to go for 4, even though this one right here is probably, this is a higher probability trade, so I usually keep TP1 at a risk to reward of about 0.8. I try not to go under it. This is a little bit under it, but it's okay to do every once in a while, and then TP4 will probably be right there. Right? Now, we know now that this was the all-time high, and we actually went all the way down here, right? And if you wanted to ride this short down all the way down, technically it was possible. But right now, we're sticking within the macro trend, which is that, right? See? Because we're in an uptrending channel. So we're not going to place our, right now, we're going to place our bets that we're going to go down here. We're not going to place our, even though we know in hindsight that we did go down here, we're not going to place our bets on that right now. This would be the trade, right? And because we're on the hourly right now. And let's see how this played out. There's target 1, target 2, target 3, target 4. That played out over the span of 2 days and 4 hours. So this is just goes to show being patient and not saying, oh, there's an RSI divergence here, let's short it right now. Waiting for the actual top to come in, right? Because if you would have said, oh, there's the RSI div, and we started moving downwards, let's short it with our entry right here, and then our stop loss above here, we would have gotten stopped out. Right? We wait for confirmation given by multiple confluences for our trade setup, and we will sacrifice getting the perfect sniper entry in return for more consistently profitable and safer trades that are higher probability. So this one went a little bit longer than I expected it to, but if you guys have any questions on break of structure or combining confluences or how to use it, as always, just shoot me a message in the chat. I will be happy to answer, and thank you guys for watching.